Hello everyone, this is Manav Modi, your bullion analyst. Wishing you all a happy Diwali, Shubh Deepavali to all. So, talking about the commodities market, let's look at how the previous month was and our view for the next month. Before we move ahead, don't forget to like, share, and subscribe. Talking about the precious metal part, one more month in the green for gold and silver. Gold and silver on COMEX has gained by 5% and 11% last month, and 35% and 50% respectively YTD. Three major factors are currently supporting the prices: US elections, Fed rate cut, and geopolitical tensions. Market participants are now expecting 225 basis rate cut in November and December. Geopolitical tensions, especially in the Middle East, has been supporting the safe haven buying. Neck-to-neck polls between former President Trump and Vice President Harris has kept the market participants on the edge, supporting bullions. Dollar index and gold were moving in tandem amidst increase in the safe haven appeal. SPDR holdings also witnessed an inflow of 20 tons in the month of October. We'll now have to look at how the overall Fed meeting, that is on the 7th of November, US elections on the 5th of November, and the overall movement is post these major events. We continue to maintain a buy on dip stance for both gold and silver prices. Moving on to crude, prices declined amid demand concerns despite the ongoing tensions between Iran and Israel. Geopolitical premium seems to be diminishing as Israel refrained from targeting Iran's nuclear and oil infrastructure. Demand concerns persist as economic slowdown in China, the US, and Europe continue to weigh on prices. China's central bank injected 800 billion yuan into the stock market, though no major impact is seen on the prices. China's Q3 economic growth was slowest since early 2023. China's refinery output dropped for the sixth consecutive month. OPEC Plus plans to begin easing production cuts in the December. US crude production has reached a record high, while oil inventories have continued to decline. Signs of a broader economic slowdown are impacting demand outlooks, pushing prices lower in the coming months. Moving on to base metals, copper has been highly volatile of late, buoyed by increasing optimism over China, while potential production cuts by the country's biggest refiner presented a tighter outlook for supplies. Factory activity and PMI data infused some optimism in market, while Chinese copper inventories were seen increasing so far in 2024. China's biggest copper smelters were considering output cuts by 5 to 10% of overall production after production disruptions in major global copper mines. Focus is also on outcome of November 5th US presidential election, which could bring widespread tariffs on imports if Donald Trump wins, followed by Fed's policy meeting. Our next few days could be make or break for copper prices in a highly anticipated meeting of the China's National People's Congress scheduled for 4th and 8th November. If the meeting fails to shine further light on the scale of fiscal stimulus, we expect copper prices to come under renewed pressure. Even as dollar index appreciated, copper continues to hold ground, and any fizzle in the likely stimulus could lead to reasonable downside in copper prices. Until then, dips will attract bargain hunters. Looking at zinc prices, they have shown significant volatility with $1,000 range between highs and lows of 2024. Current fundamentals are relatively weak, with demand in China remaining flat, suggesting that much of the recent price movement stems from the external factors. The PBS has implemented interest rate cuts and eased mortgage restrictions. Also looking at LME zinc prices, they've surged to $58 backwardation, marking the highest level in 2 years. Inventory levels show mixed signals, with SHFE stocks rising by 250% from the lows, while LME zinc stocks are up 11% YTD. Supply disruptions remain an ongoing concern, represented by the temporary halt in operations at Australia's Century Zinc mine until mid-November. The ILZSG recorded a shift from 56,000 MT surplus to a 164,000 ton deficit in 2024, driven by reduced smelter output due to raw material shortages. However, a surplus of 148,000 tons is projected for 2025. a substantial stimulus could prompt a medium-term recovery across the metal sector. While supply challenges may stabilize, steady demand growth is likely to continue supporting the zinc prices.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.